So Bitcoin has finally hit its 50% target at $42,000. We hit this yesterday and now slightly rejected off this level. I called these moves days ago and not only that, but our calls have been very, very good throughout this bull market, calling the lows here, calling the pullbacks on all charts, including the SPS, NASDAQ. And Bitcoin now hitting the 50% move. Now, the fear and greed index now is reaching some very, very massive levels. Generally, when we get above these 70 areas, you tend to get a little bit of significant pullbacks. Now, this is getting dangerous here now, right? We were bullish all the way back in calling the bottom on a time analysis, and you can check out at the channel. The title is Amazing Chart Shows that Bitcoin has bottomed. Go check it out. So that is when the bull market actually started, right? We're up at the 50% of this range. This is not where we should be interested, right? We now need to unfortunately wait for a pullback if you have missed this move. And I don't really think that you would actually even get the reload zone, which is the 61.8. I don't see us. If you're lucky, you might be able to get a $20,000 pullback, a $28,000 pullback to this levels. This has been a significant move and quite explosive. I don't think it's sustainable for long. We don't know what the narrative will be for why this has topped out. I'm not saying it might top out here. You guys know that some of my targets are the 50% and of course the 61.8, which is at 48,000. Now that 48,000 target comes from previous cycles where Bitcoin has gone and touched the 61.8, which is the golden ratio, in previous times before the halvening actually occurred. Now if we pull up the halvening past events here, we can see that the Fib golden ratio gets hit before the halvening happens, right? Now our next halvening is in April of 2024. So let's plot that in here for us. So there is still time left for us to hit that target. Not only that, let's see what happened in the cycle before that, from the highs to our lows. Once again, we can see perfectly how this market touched the golden ratio. And in fact, this cycle literally touched it right before the halvening happened. And when the halvening happens, you tend to get a technical sell-off like that. Let's see how deep this pullback was in 2016. That was a 40% pullback over there. Let's go ahead to the 2018 and 2019 cycle. Now the sell-off happened a little bit more earlier because we had this Ponzi that played out here in China. It doesn't matter, the rally still happened before the halvening and the pullback happened. Before that, that was a 72% pullback. Now, this was not as sustainable as previous cycles. Like we have seen in this cycle, we've built a nice, slow trending up market. Now, it's been a little bit more explosive now, and the greed shows that, but it's still fine. So, if we are to see some pullbacks happen here now, where could we see those pullbacks come back? Now we can do a fib retracement tool and we can see that if this is the top here at the 50%, which is likely, right? We could see these areas down here get hit. These are the reload zones for these levels. And let's just measure that down for us. That's also a 40% retracement. We have seen those pullbacks before. Now, if the market is to go higher here all the way to the 48 and maybe even the 50K, if it really gets exuberant here, the fib tool obviously just readjusts the reload zones. So let's plot it at 48, which is the overall reload zone, the golden ratio in reverse at 40K. And it plotted it perfectly. My measurements was really good. Like that, the reload zone is exactly at $28,000. So that would actually give us a really good opportunity. As you can see, these reload zones are now overlapping, and it's getting a little bit technical here, but we've got a short-term reload zone, we've got the overall reload zone of the previous cycle, which both gives us a reload zone here at the $28,000 area if we are to see a pullback all the way to 48K. Now, this is how the market works. They'll trap you, and because this is where retail starts to enter the market, right? We can see on mainstream publications Bitcoin on the front page as their session starts. So it's getting really risky here, and I always feel sorry for retail as they're lured into these things when it's way too late. You guys know that I've been bullish throughout the bull market from the bottom. I'm not trying to make predictions here, but because that is practically impossible, right? But this is just what I have in mind and what I would actually like to see happen. Now, I've called for a slower blow off or a slower move to the upside. This has been quite drastic, but it should have been expected, because if we look here and look to the left, we can only see red candles, right? So the opposite of that will then happen in this area here, where you would simply only see green candles absorb these previous red candles. There's a popular saying in technical analysis: if you're in doubt, just look left, right, to see what the price action looked like previously. So this was to be expected, that the price would move through this area like a hot knife through butter. And the same happened back here. If we look to the left, just it moved to the opposite side. So there wasn't really any trading that happened here. It just moved straight through it. And you can expect the same to happen here. So yeah, and it ends coincidentally right at the 48,000 level. So these are major targets. All of the indicators are very, very overextended, not just on the daily time frames, but on the weekly time frames as well. We do have some warning signs, right? Let's see if we can pull that up here. Yeah, so the Willy and the RSI both are very, very high. The RSI here as well, very, very high. So a little bit risky here. You're seeing the RSI print green here. The last time we were this high was actually at the all-time highs, right? So a pullback when this finally tops out will be in order, because this cycle still has a long time to go. If we were to blast through these levels and make all-time highs this year or the early next year, I would be very, very concerned, as that this might have been a left translated cycle, which just simply means that the bull market is already over. Now, I don't think that is going to happen. I expect us to top out here somewhere, return to the mean, create some market structure, and then really, really good structure all the way into 2026. Now, this is a little bit, ignore the time frame that this is pulled in. We can look something like this, maybe a little bit quicker, and even faster than that. I'm having trouble drawing it in the time frame that we are looking for this cycle to top out in. The top of the cycle most likely is going to come in between October and September of 2025, so somewhere in here, with my conservative targets of 85 to 90K. So maybe a pullback like this, a nice double bottom, and off we go into the 85K areas, maybe with a blow off top. Hopefully we get a blow off top instead of something sinister like we had in the previous top down here, right? So either way, something like that, and then we head into the next cycle. So there's still a lot of time left for the altcoins and Bitcoin to do really well. Let's cover some of the other coins. Coinbase, which is a very correlated market. The ticker is coin. This is Coinbase rather. We can see a beautiful bottom that has formed here with your higher lows and higher highs. This was in fact your breakout level here, and Coinbase is well on its way. A little bit oversold here on the weekly, right? So this itself needs to have a little bit of a pullback. If we can come down and retest this breakout level before heading higher, that would be very healthy. So BTC, we have the rates. This is the 2 here, so let's go to the 30. When this goes down, the interest rates go down as well. So this gives a little bit of a relief for your risk assets. And you can see how it broke down last week. And you can see how this week, all of your risk assets have been pumping nicely. This is the total market cap on the weekly. This is very, very high in overbought areas. We haven't been this high since well into the accumulation phase before popping off. I would still like a retest of this breakout level. We can see on the chart here at 1.26 trillion. I would like to have it pull back to that level. Total dominance, BTC dominance, is almost forming a bearish divergences here. It just has to rally a little bit more, and then we would finally have bearish divergences as the indicator is still lower, yet that the price is higher. But the dominance has been showing a lot of strength. It actually looks like it wants to break out of this ascending wedge here. Your targets up here is all the way at the 60%, which is the golden ratio, and some extension levels that we can see here. So that's why that area is highlighted there. Just going to remove this extra one here. So either we get rejected at the 50% or this goes all the way to 60% dominance for BTC. So this would create a few divergences here, and this might take a little bit more time to play out, which is totally fine. This is to be expected during this time of the cycle where Bitcoin dominates the cycle, and when it finally does stop out and starts distributing some of the risk, you would find the altcoins doing well and the Bitcoin dominance stopping, because when Bitcoin dominance starts to fail, the altcoins have their day. Ethereum, by far the better, the better investment here, because it's only now broken out of its accumulation phase. We can see the breakout level here at 2031. There's a measured move. We don't know how long this will take, all the way to 33,193. We can also put in our fib resistance tools to see where we might be getting some resistance. The important levels to look at is the 50%, which Bitcoin obviously just hit, which is at 2,874. We can see Ethereum has a lot more room to move. And finally, the 61.8, which is at 3,345. Those are your major resistance levels. If we look at what Ethereum did in previous cycles, let's just make sure we're pulling it from the top all the way to your lows, which is at $83. We can see that Ethereum really didn't interact with these levels before well past your accumulation phase in Bitcoin, and it just actually just ignored those levels and blasted through. This is your breakout level here where we are currently at. So if we want to make this assumption, we are currently in this area for Ethereum, as this is the breakout level, right? But to be fair, it actually looks like we are supposed to be here with that last pullback, and off we go. Although Ethereum is much higher than this, it is flirting with the breakout level here. Anyway, this is your sign of strength, the area that we're currently in. Like I've said in previous live streams, the altcoin, the cycle is a little bit early, it seems, right? Yeah, so from the lows, we get our breakout level, and now we're flirting with that breakout level. And in fact, it does look like it is breaking out because you've got your breakout candles, you've got another candle confirming it, and now moving higher from here. Be ready for very expensive gas fees. That's just one of those things. We've talked about the dollar breaking down. Now, this is the weekly frame. We have broken down. We've found support at the 50% level. Once again, we can see how important this level is. On the daily, we were very, very oversold on these levels. No bullish divergences formed, but I expect a relief rally here before at least rolling over. So this will put pressure on your risk assets and Bitcoin as well. Let's quickly take a look at the SPX. Wall Street is looking at this double top here on the daily time frame. Very oversold at these levels. Could go higher, right? But we are right off the all-time highs, and expect Bitcoin to do some really insane things when the stock market and traditional finance finally breaks all-time highs. We've got really powerful markets across the board. India is at all-time highs, which I saw earlier today, and Europe is doing well. Many developing countries' stock markets are all taking off. So yeah, it sounds crazy, like, because everybody is saying that a recession is in play. They just don't know the timing. They've been saying 2022, 2023, and now 2024 is the recession year according to them. You guys know I've been bullish throughout. We are proponents of the 18.6-year property cycle, and we've just come out of the mid-cycle slump. And from there, you get to the last phase of the cycle, which is very explosive. It does show during this time that there tends to be high inflation as well. And I know for many people, real estate is already not affordable, and many people have been priced out, but this is only the start. The end of the cycle is only in 2026. So a very explosive phase to be happening, and very hard to explain it to the normal person that this market still has to go higher. So that is the SPX. We are pretty much off the all-time highs. If this does make a higher high here, there would definitely a small higher high here. There would definitely be some divergences here. Maybe we have another pullback and a consolidation in this area before taking out not only this local high, but the higher high or the all-time high after that. Some of the altcoins have already been doing really, really well. Now, Link has been in this accumulation phase for a very, very long time, but this is a risky area here. I can't be interested up here. I need to wait for a pullback to this area. Now, many altcoins do look like this, including Pulse Chain, but Pulse Chain is kind of front running the market, and it has already started its pullback. Now, I'm pretty sure there are more coins that do look like this, but this is called distribution, right? This is not where you can be interested in getting these things. If we look on the RSI down here, very overbought, and this is even the weekly scale, right? So momentum is running out here. I'm not sure if this can go higher. This is a fib level, the 0.236 at $16 for Link. Could we go all the way to 23? Yes, that's very, very possible. But unfortunately, you have missed this boat. You need to wait for a pullback. Wherever this pullback doesn't eventually come in, that is where you should be interested. Not up here. Doesn't mean it can't go higher. It just means that the risk is a little bit too high here. But if you have in your strategy a shorter time frame trade, like a 30 or a 10 or even a 50% move, that is up to you, right? I'm not your financial advisor. You need to make your own decisions. I only trade the strategies that I have and that has worked for me over time, right? So I am not you. You are your own person. The last chart that we will look at is the tether dominance. Now, when this goes down, obviously some of the tether held in people's wallets are flowing into coins, including all of the pretty much all coins, right? Because USDT trades against BTC, all of the altcoins, etc., etc. Getting very overbought in these areas, not oversold just yet, not overbought, excuse me, but there is a measured move in this on this chart all the way to 3.27%, but this is the weekly chart. This can in fact take years to play out, right? Or months, depends on how quickly the market decides to move. Overall, the market looks the whole market looks a little bit overextended here, as I've been cautioning. Maybe we do get a retest of this level or spend a little bit time here before going lower, but I expect a pullback in the coming months at least, so we can reset our indicators, reset our market structure, so we can go much higher in the exciting phase of the bull run, which is expected to be happening in 2024 all the way to the end of 2025, right? Gold itself finally, after 10 years time, has made a new all-time high. Let's just zoom back here. So it's been a while, and it literally just made an all-time high and then dumped below this level. These are bearish divergences on the RSI on the weekly scale. So if gold doesn't assert itself here and makes a lot stronger move, this bearish divergence is in play, and it looks like a top has been formed here. It would need a lot of consolidation to have enough strength to finally break above these levels. With that being said, I think I have covered most of what I'm seeing in the market today. Thank you for watching this video. Remember to always play from a position of strength. Do not get wrecked, right? Check out the links in the description down below. Like the video, subscribe, and I will see you guys in the next video. Cheers for now, and bye-bye.